Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate mumbo jumbo into something you can actually understand. Today, we're diving into StartEngine CROWDFUNDing's latest quarterly report. Will it be a success story, or will it be another tale of a company struggling to turn potential into profit? Let's find out. But before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join the conversation. StartEngine, the platform that lets everyday people invest in startups, just dropped their financial report for the first 3 months of 2025. The big news, they actually made a profit, a net income of $1.7 million, a huge jump from a $4 million loss in the same period last year. But how did they pull it off, and is it sustainable? First things first, this is a Form 10Q, basically a quarterly checkup for publicly traded companies. We're looking at StartEngine's performance up to March 31, 2025. It's important to note that this report includes unaudited information, meaning it hasn't been fully verified by external auditors yet. We're going to focus on the important bits like the financials and what management thinks about the current situation. Alright, let's get into the numbers. Looking at their balance sheet, which is like a snapshot of what the company owns and owes, we see some significant changes. Cash on hand has jumped to $18.9 million, a huge increase from the roughly $10.80 a year. That's a pretty solid buffer. Accounts receivable, which is basically money owed to them, has decreased from $2.8 million to $2 million. It means the company is getting paid faster or selling less on credit. Overall, their total assets increased from $52.5 million to $56.8 million. That's a decent climb. On the other side, accounts payable, which is the money they owe to others, has also increased to $782,908. Accrued liabilities, think of unpaid bills and such, went down to $5.4 million. Deferred revenue, which is money they've received for services they haven't provided yet, increased slightly to $3.2 million. Overall, total liabilities are down a bit from about $10 BU dollars to $9.4 million. And finally, the accumulated deficit also improved, which is good, meaning that they lost $1.7 million. Now for the juicy part, their income statement. This tells us how well StartEngine performed over the last 3 months. Revenue skyrocketed to $30.4 million compared to just $9.8 million the same period last year. That's an absolutely massive increase. However, the cost of those revenues also went up significantly from $4.8 million to $20.30 million. This means it's costing them a lot more to generate that revenue. So even with the higher cost, the gross profit, which is what's left after subtracting the cost of goods sold, is still way up at $10 million. Looking at operating expenses, things like general admin and sales, total expenses went down a bit, which is a good sign. This led to an operating income of $1.7 million compared to a $4 million operating loss last year. That is a huge swing and is their first profit to the company. And finally, as we mentioned earlier, net income attributable to stockholders landed at $1.7 million. The company also took $1 bond point forward in cash flows from sale of real estate. One number that stand out, weighted average shares outstanding diluted are now over 1.2 billion, meaning that in order to have meaningful profit for each share, the company would have to be making a lot of money. The company announced that on May 6, 2024, StartEngine CROWDFUNDing split its designated common stock and preferred stock on a 20-for-1 basis. Now, time to dig into the notes. These provide extra details and explanations about the numbers. StartEngine's main goal remains helping small investors fund private companies. They also highlight the growth of StartEngine Private, that venture to provide accredited investors the opportunity to purchase membership interests in series which own shares of VC-backed and generally late-stage private companies. Management believes that there is no substantial doubt about the company's ability to continue as a going concern at this time because of their cash position and net income. The report goes over the basis of presentation, what StartEngine consolidates, how they use estimates, investment securities, warrants, and private investments. Investment securities consist of common stock equities that are tradable in active market. Though it's interesting to note their handling of investments like warrants and stock received as compensation. This is very different from cash, so make sure you follow the process closely. The investments are being revalued each period. The company purchases shares of venture capital backed late stage private companies and records the purchases at cost. There are various tests that need to be passed in order to accurately and fairly value the assets. In the report, a big part is to do with financial instruments. The report lists assets and their value within the levels. This describes accounts receivables are recorded at the invoiced amount and are non-interest bearing. Revenues are earned as services are rendered over the duration of a campaign, so that is good. Also, the StartEngine Venture Club subscriptions revenue is recognized over 12 months. Cost of revenues are mainly internal employees, hosting fees, and processing fees. Cost of revenues now includes StartEngine Private. The company will also recognize the acquisition costs of such services, which increases cost in recent times due to the sale of the security. The table reveals that they hold marketable securities and stock, totaling a decent amount. These need to be watched out for. It also contains descriptions of how and why they change, which can help determine if the business is performing better or worse. The company's property and equipment mainly consist of computer equipment. Intangibles is primarily from the Seed Invest business, which has detailed estimates and amortization as well. The company are currently unaware of pending or threatening litigations that the company is currently involved in. It is revealed that as of March 31, 2025, the company has been able to allow the issuance of some more shares. The company sold some common stock via its Regulation A offering and are set to use this with a certain strategy. The company has seen income tax expenses and is carefully looking into the assets it has and if they require more attention in terms of taxes. Subsequent to this filing, it shows that the company has had its equity incentive plan approved. The company are able to follow through with this plan on June 4th, 2025. Management believes that the numbers are primarily due to the success of StartEngine Private. A lot of voting control in the company is in the hands of a few. It seems that Howard Marks is in charge and knows what he is doing. It all boils down to this, to whether the people at the top have the company's interest at heart or whether they are making decisions that purely benefit themselves. The report also speaks about the total consideration for the purchase, the IP, and the customer list of SI securities. Of the risks the company discusses, one of the big ones that stand out is how sensitive they are to regulations and changes to it. Finally, the exhibit section goes over all documents presented, which is fairly standard for these reports. Now, looking at these results more broadly, StartEngine's pivot to StartEngine Private seems to be paying off big time, at least for now. They've managed to swing from a loss to a profit, which is impressive, but they're also shouldering higher costs to achieve it. It's like they found a gold mine, but the mining equipment is expensive. One thing that stands out is their weighted average shares outstanding diluted, which means they are at risk of per share price targets. Another issue is that few people control the votes in the company, which may or may not be a good thing. The risks seem to revolve around the heavy regulation they are subjected to, as well as needing to maintain financial and managerial systems to stay afloat and remain innovative. The big opportunity is StartEngine Private and to develop what it can offer. Alright, that's our breakdown of StartEngine's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.